Welcome back now. Calgro M3 saw its revenue decline in the first half of its 2026 financial year, but kept a close eye on costs to prevent a bigger hit to its profit margin. CEO Pierre Malherbe joins us now with greater insight into the half year that was. Thank you so much for your time, Ben. Of course, the first thing that jumped out at me that the company highlighted is the pressure on revenue and profitability due to the capital allocation shift to the Bankenveld project. Just put that into context for us.
Thank you. I think just in simple terms, the Bankenveld project will be developed. The bulk and link infrastructure that you're creating for the project is done in the JV, so you won't see it through the revenue lines.
Okay.
That was a conscious decision to allocate capital towards the project to start. And is not coming through the numbers as yet.
Yeah, and on that, on Bankenveld, Calgro is currently in negotiations with the public sector on agreements. What are those for and how are they progressing?
That is to contribute towards the bulk. That's the reservoirs and the intersections and the electrical substations to be constructed for the project. And if we do conclude a transaction with the public sector, that will allow us to enter the market in a lower LSM level, whereas we have to pay for it ourselves. Obviously, we go into a higher level and we can't cater for all the groups and LSMs that we would like to.
And are there timelines that you are working with here in terms of the conclusion of these agreements?
Yes, there are timelines. We are in negotiations with the city to try and conclude that before the full year results presentation. We made the commitment and we knew that starting the project and going into the project, we will not have it in place. So it was planned that we would spend the capital ourselves and then recover it. So yeah, we would like to have those contracts in place before we go to the full year results presentation.
And actually, just on Bankenveld, before we move on to the other segments of the group, I'm just wondering. Then, of course, you did see these pressures on revenue and profitability at this time because of the reallocation of resources. How long then do you plan to see, or do you anticipate to still see those pressures on the top and the bottom lines?
I think as soon as we've got the contracts concluded, we will be able to recognize that, because we are registered with the City of Johannesburg. The project's been registered. We've got a project number, but just until the contracts are concluded, we can't claim against that. So they will allow us to claim for the Urban Settlement Development Grants, the USDG, that the city used to install bulk and link infrastructure. And that's the infrastructure behind it to make it possible to develop the land.
All right. Well, I want to go into demand side then, zooming in on that housing market demand. How have consumers responded to the shifts in the interest rate cycle?
The interest rates are coming down slowly. It's the cycle this time around has taken longer to get to the level that we would like. That our consumers are under pressure. The interest rate is high, so the consumer is definitely under pressure. But what we did see is the investor market that aims at the rental opportunities compared to the end user itself. That is a strong market, and that allowed us to year on year grow the actual sales that were concluded. Although the consumers still under pressure.
Yeah, but are you seeing a significant turning of the tide there when it comes to demand?
Yes, the tide is turning, but I think it's like I mentioned earlier, it's taking longer than we expected. We've still got the support from all the financial institutions. We're still getting 100% bonds, and the market is there. The market didn't disappear. I think the consumer is just a little bit more under pressure than we would have liked to see it at this stage and this far into the cycle.
There's also something very interesting that the company talks about, a shift in revenue composition in that residential property development segment. Just expand on that for us and what story that's telling.
Okay, so in the 6 months under review, we focused a lot more on completing actual construction of units. So we completed a section of, or one land parcel of in the Scottsdene project in Western Cape, and we're trying to trade out those projects. There's some of these projects that's getting to end of life, natural end of life, and we need to complete these projects that will allow us to concentrate our capital and our resources to the Bankenveld project. So we saw a lot more of the revenue come through as construction of units compared to infrastructure. In the good years, we lean heavily on the infrastructure development to increase the balance sheet and make it possible for development. But in times, uncertain times, you don't want to overcapitalize and spend on infrastructure if you don't know what your ability is to recover that cost through the public sector. And as we know, the city of Johannesburg is under pressure, the public sector. And we expect a recovery before the elections next year, that cash will become available for these developments, but we're just going through times where we don't want to overcapitalize and spend too much on infrastructure.
Okay.
We'll rather concentrate our efforts on completing units under construction.
All right. Well, let's scoot on over to the Memorial Park segment. Just paint a picture of the growth momentum there. And are you at a point where you are seeing consistent and predictable inflows?
Yes, we are. The Memorial Park business is maturing. It's contributing towards our overheads. We generated 50 million out of the Memorial Parks that contribute, and that allows us to grow into a project like Bankenveld. We can take a step back and see us develop or install bulk and link infrastructure, not expecting it to come back. And the Memorial Parks is just at a stage diversifying us. Memorial Parks don't have the same public sector exposure. It is not linked to the interest rate cycle. It's more predictable cash flows, like you said. We changed that barrier to entry by introducing a lay-by product that we only recognize the revenue when the full proceeds has been received, but diversify our exposure into the residential side.
All right. And Ben, just lastly, as we wrap up the conversation, where does Calgro M3 see the biggest opportunities to drive growth momentum in the last 6 months of the financial year?
We're definitely going to ramp up construction. We want to build more units or have more units under construction in the period. But I think the bigger picture is we're looking at just balancing the ratio between the Memorial Parks and the development business to make use of that, diversifying our risk. We want to dispose of non-core assets, and a non-core asset is just the opportunities that we have identified that we will not be developing in the next 5 years, and there's no need to carry that on balance sheet. So in the process, we might be able to reduce our debt in the longer term. We're comfortable with the net debt to equity ratios at 0.75, our internal targets. But it will allow us to, in the long term, medium long term, to reduce our debt and get a closer relationship between the net debt of the company and the market capitalization.
All right. Well, we do have to end the conversation there. Thank you so much for your time and giving us more insights on those numbers that came out of Calgro M3. That was Pierre Malherbe, CEO of Calgro M3.